As a big presidential election arrives, Super Tuesday is right around the corner. So, what's most important is that you get out and vote. It's important that our leaders represent the populace of the country. So, voice your opinion. And during this episode, we're going to discuss the potential impacts of a presidential election on the stock market. My name is Brian Cannon, and welcome to Markets in 5. Going to go through a couple of charts specific to the presidential election and what we think might happen. Before we do that, let's get a check on the S&P 500. So right now, everything still looks good. I mean, we're still trending up. There's no reason why you would necessarily want to, try to time the market and get out of this market at this point. I mean, we're almost at the tippity top. We're still higher highs and higher lows, even on a shorter term trend. On a micro level trend, we're starting to roll over a little bit, but as of right now, we're still holding trends. Now, the futures are down a little bit today, so I'm anticipating this to break. So we're looking for several levels to hold. So first, we've got this shorter moving average, the 20-day moving average. If it breaks down to that, we might come down here to the 50-day moving average, the red line, or possibly the 100-day moving average. And then certainly we want to make sure that we're holding up on the 200-day moving average. As you can see here in the blue line, we've got the election kind of day marked. So that's coming up quickly. And but again, as of right now, we are getting a slight rollover here on the RSI, but it is still north of 50. So again, anytime the market is above 50, it means it's trending and doing what it's supposed to do. When it drops down below 50, it means the market's heading for a little bit of trouble. So we want to watch the RSI level real closely. And then secondly, the MACD, same thing, starting to tail off a little bit. We've had kind of a negative cross down. However, we're still very, very positive. So again, when you have the RSI trading below 50, and you've got the MACD crossed over and really breaking down to negative territory, again, that's where the market tends to struggle. So, if it does struggle in, prior to this election, and we get a little pullback here between now and next Tuesday, we're looking for these levels to kind of hold. But this shorter term trend I anticipate could get taken out. So then we just want to kind of watch the levels, and there's lots of other levels here to watch. And so if you get too much into trying to time it, you can certainly miss a big bounce. So we just want to pay attention to the levels. All right, so the other thing that we want to keep our eye on is the VIX. And the VIX is the volatility index indicator. So it's the what they call the fear index. I've talked about this quite a bit in the past, but you can see that the levels are steadily climbing. In other words, we're kind of having higher highs and higher lows at this point. So it almost looks like it's building up to where it could provide some volatility. So, it popped above 50 here. We've got a kind of it's above the zero mark here, the MACD. So we want to watch these levels very closely, especially as we have the uncertainty of the presidential looming on Tuesday. All right, so this is a S&P seasonality chart comparing the market since 1976 up until 2023. In the blue there is the non-presidential election years, and in the dark blue, you can see the presidential election years. Okay, and what you'll see is that the dark blue line, there's a drop down prior to elections, right? So that's the buildup, that's the uncertainty, that's everybody's, there's just a lot of uncertainty. The market does not like uncertainty. And you can see once that uncertainty becomes clear, historically speaking, the market does pop up. All right, so this is basically the same chart, but I wanted to kind of show it in a way that breaks it down a little bit. So you can see that we're going back all the way for a long time, and we are literally just checking the dates that correlate to the election years and then charting that backwards. So you can see that the build up from September essentially over to October, the market does head down during election years. And then during those same election years, once the presidential election has been decided, the market does pop back up. So there's a lot of concern around the market and raising cash and trying to get ahead of it. And but you have to go with history. You have to go with the charts. And right now, the charts say that most of the times the market goes down prior to the election, and then post-election shoots up into the end of the year. So we got to hang tight on this one. So in wrapping up, basically, we do expect volatility in the market, but either way, I think it's important to follow the trends. And as long as the trends continue to head up, the long-term trends, then we want to be a part of the market. And not until they roll over is when we begin to protect. So if you have any questions, give me a shout, and I'll see you on the next Markets in 5.